Is it over for the US dollar, or is the bounce just starting? I'll have the details in today's video. In this weekly Forex forecast, we are discussing the US dollar, the euro, the pound, and also gold. I'll have all the key levels to watch, also some setups for next week, so be sure to watch the entire video. And if you're new here, my name is Justin Bennett, founder of Daily Price Action, Forex trader for the last 17 years. And I'm putting out videos like this one every single weekday, so be sure to subscribe. Now, looking at the DXY here, let's start on the monthly time frame, really zoomed out, because this has set the stage for the past few months here for the market, because it has been very sideways, and there's a reason for that. If you look at this channel here, going back to 2011 on the DXY, you can see where the market is coming off of the bottom of this channel. And every time the market has tested this, for the most part, especially these two lows down here, you can see where we have gotten months of sideways action. So this time is no different. This is exactly what we saw here at the lows down here around 2020, 2021, also down here at 2011. So far, guys, the price action is very identical to what we saw here these past two times. Now, of course, that doesn't mean that the market will bounce, but it's not over for the US dollar. Okay, that is the bottom line here. It's not over for the US dollar in the sense that we all know the market has been trending lower. It's been absolute carnage so far in 2025. And this downtrend is still intact. I'm not saying that it's not. I'm not saying that the bottom is in here. But what I am saying is that with the market coming off of that 2011 channel support down here, you do have to be careful getting too bearish on this market because, like I talked about in the last weekly forecast, we have seen a change in the angle of attack here from the US dollar. Back here was very steep, and it has kind of leveled out here over the past few months. So that's the first thing to be aware of with the US dollar here with the DXY. And by the way, guys, I changed the color here on this recently. Not that it's a big deal, but if you guys do find it helpful, let me know in the comments if you find this green helpful, or if I should go back to the blue. I know it's not a big difference, but I wanted to change it to make it a little easier to see. But let me know in the comments what you guys think of it, and if these chart colors work for you guys as well. But looking at the daily time frame here, you can see very congested market. And last week, what I talked about there was this imbalance down here at 97.5. So if you saw the last weekly forecast, and that's why it's important to really watch these videos and study them, because last week I talked about this level here when the market was coming off of 98.6 resistance. So this down here is a single print, also an imbalance here for the DXY. What I mentioned in that video was that we could see the move down here to test 97.7 and then maybe get a wick down here to fill in this imbalance. And that's exactly what we saw here earlier this week. So you can see where the DXY bounced right off of 97.5. And in Thursday's video, if you saw that as well, you can see this level up here at 98.1. I had this on my chart when the DXY was trading back here. So it was bouncing in that video. However, it had not tested this yet. And you can see where 98.5 also served as a key resistance here for the US dollar. So these levels are not just levels I made up. If you go to the 30-minute time frame and turn on TPO, time price opportunity, this is a indicator in TradingView available for premium plans. And what you'll notice here is I'm going to clean this up just so that it's not too confusing. So if we turn off the blocks and just look here at these single prints, these are imbalances in the market. And what this means is that back here, we had this expansion out of this congestion. You can see this was that level there at 97.5. This was a magnet for this market so far this week. We got the bounce from there. And then you had this other level here out of this expansion from this consolidation as well. And that level was tagged here on a Thursday. So you can see how in a ranging market, how this stuff is absolute gold, guys. I mean, these levels play out, over and over again like this. Now, it doesn't mean that they're always going to be tested. It also doesn't mean that they are always going to act as support and resistance. You can see that back here, right? Because here's another one. And you can see where this one right here, even though the market came up here and took this out, it didn't serve as resistance. The market just blew right through it. So they're not always going to play out that way. However, here's another one right here that you can see that we had this imbalance that formed right through here on the way up. The DXY came down here, filled that in, and then took off. So for the most part, guys, in ranging markets especially, these levels can be really helpful. And I'm not sponsored by TradingView in any way. This is just an indicator that I found really helpful. So turning this off, guys, let's clean this up here for the DXY for next week. What this is going to come down to is really what happens here at 97.7, because we've discussed this before as well, but on the weekly time frame, you can see where last week did close above this. Okay, so really sideways market. However, last week did close above 97.7. And so far it is holding above that, although just slightly. I mean, right now the market's at 97.72. It's literally right on the level right now as I'm making this video. So it's going to come down to where we close here in relation to 97.7 going into this weekly close. Now, if it closes just below, I'm talking if it closes at like 97.67 or 97.68, that to me is not really going to represent a breakdown because this is an area. I think what it would take for this market to really see weakness next week is going to be to see it lose this level down here, because in Thursday's video, I also had this trend line on my chart. And we talked about how the market was breaking out from this. And notice what got tested here on Friday, right? Right off of that level. I mean, literally right on the low. And so this is going to be the level to watch next week. If we see the DXY start to break below 97.7, come down here, take this out, and start to close back below here, right? That, in my opinion, would be the signal for a push lower down here toward levels like 97.27, that imbalance down here as well that is open for business right now, and then also 96.8, which is the bottom of that 2011 channel. Okay, so a lot to pay attention to right now, despite the fact that the market is sideways. Now, if it does hold above this area down here, remember, this is going to be key support. If it does hold below here and we see this finally start to carve out a higher low next week and we see some strength here, right? Specifically, the market breaking out of this consolidation. If we see that next week, then we could get a push back here toward that resistance around 98.1 and potentially 98.6. Okay, so a very congested market. Like I've said recently, I think that this is the kind of market where you really want to trade what's on the chart. You always want to trade what is on the chart, of course, but in a market like this, it's especially true because it has been so sideways. And so what that means is just respecting the fact that we have support down here and we have resistance up here. If we close below here, then this is your new range, right? Support down here, resistance up here. So it's just a matter of, right now, this is your range up here. If we close below, this becomes your range down here. So just trade what's on the chart, guys. Don't get ahead of yourself and start thinking that the market is going to start trending all of a sudden, because we've literally seen this now for months. Okay, so let's move along here to the EURUSD. And this right here on the 4-hour, we'll take a look at that in a second. But first, I want to start on the weekly time frame, because this sets the stage for what we've seen ever since all the way back there in June. So also a very sideways market, and this one here is coming off of the top of this channel. So I often talk about how markets love symmetry, and this is no exception here. This is what I mean. This is an equidistant channel. These levels run parallel to one another, and you can see where over the past few months, we have now had two tests off of the top of this channel. Now, we haven't seen follow through though. We haven't seen follow through to the downside, and that could obviously mean one of two things. One, it could mean that we are going to get a break higher, okay? That the market's just going to consolidate here at this resistance area and just consolidate and then break higher over the coming months. Two, oftentimes you do see markets go sideways at macro tops and bottoms, okay? So the jury is out here though. The jury is out on what we're going to get from the euro. And again, we have to go back to, trade what is on the chart, not what you want to happen. We can't sit here and hope for a trend to develop, because it's literally been months of this right now. So in my opinion, it is best to trade what is on the chart. Resistance up here, support down here. So for now, trade the range, and this is where it's important too, to adapt to market conditions. If you're not a range trader, then maybe it's, a good idea to look into it right now, because otherwise it's really difficult to trade these markets. But 1.1645 is that support level. This is that 5-week composite POC that I talked about before. Bottom line, that's a fancy way of saying that this is where the market spent the most time back here in this consolidation. And I pointed this out to VIP members in Discord when the market was breaking down up here, talking about how this could serve as support, and it was right off of that level. Now, looking here at the daily time frame. So let's move out here. This is our February trend line that we've discussed recently. You can see where we did get a breakdown recently from the euro. Now, so far, there hasn't really been any follow through. We've seen the market bounce from that composite, and it played out pretty much like we thought it might this week. And the last week of the forecast, I talked about how we could get that bounce back here toward this consolidation back here, right? And that's exactly what we saw here from the euro. Now, another thing that we talked about was this single print or imbalance up there, 1.178. And you can see where here earlier this week, so this was on Wednesday, that high was right near that level. Now, if we go to the 30-minute time frame, here's one reason why we could see this move a little bit higher. If we go in here and turn on TPO again, you can see where this level up here, this imbalance, okay, is still kind of open for business. And so this sits just above that high. And so it kind of makes me think that we could actually get the euro coming up here and taking out this high next week. So another reason why I think that we could get that is if you look here at the 4-hour time frame, and I talked about this in VIP as well, that's the benefit of being in Discord, is that this right here, so when the euro was bouncing yesterday on Thursday, I talked about this right here, how this was a pretty aggressive move back from the low, and it started to look a little bit more bullish. So what I told members was that a close back above 117.30, 1.173, would flip this back to support, and sure enough, we got the close back above. We had support here on Friday. Now, the euro tried to rally, found some resistance up here at this high, And so far, it is still holding above this level. Okay, so basically what we had here from the euro was a classic failed breakdown. Okay, so we had the 4-hour close below. You can see a really nice level here off of these lows, these highs up here as well, this ascending channel, and we had the close below, and then we had the close back above, retest as new support. So basically, bottom line, as long as this is the case and the euro is holding above here on the higher time frames, then we have that potential for the move back there toward those highs, and again, up there toward that 117.80 area next week. All right, so I don't think that this is over, and we'll take a look at the pound as well, and that's kind of saying the same thing when we look at GBPUSD. But for the euro, really, as long as 117.30 or so is intact as support, we do have that potential for the push up here into this area next week. Okay, so again, range bound market. Trade what's on the chart. A very range bound market, very sideways market. This is not the time, in my opinion, to be looking for 2 or 3 or 400 pip moves, because we're just not in that kind of environment. Now, looking at GBPUSD, this is why I'm kind of saying that it is looking like we could get that push back here into some of these highs for the euro and the pound, because when you look at this market, first of all, if we take a look at the daily, obviously very sideways market, but what we discussed in the last weekly forecast was that we had to close below 1.338. So this level right through here, you can see the lows back here, and we never got to close below here. We got to close below on Thursday, 2 weeks ago, right? Then Friday closed back above. This was a failed breakdown. So what I said in the last weekly forecast was that looked bullish and potentially would give us a move back here toward this consolidation last week. And that's what we got. Now, there are still imbalances for the pound up here around 1.358. So that could serve as a magnet for this market next week, okay? This did look pretty bearish. I mean, no doubt about it, this pullback that we got here. But so far, the market is recovering. We're seeing it close back above some key levels here. And again, you still have this pocket up here that is open for business for the pound. Now, if we drill down to the 4-hour time frame, this is where things get a little bit more interesting here on Friday, because we have GBPUSD reclaiming a significant area. So this right here was that unfinished auction that we talked about, right? And areas like this, you can see highs back here, all of these lows through here, we got the close below. And this is very similar to the euro, that failed breakdown that we just looked at. So you can see close above, 4-hour close above, retest as new support. This right here is that technical catalyst, in my opinion, for the move back here toward these highs. Probably take these highs out and then target this region. That is what I would like to see here from this market. And you can add a little bit of confluence to this as well, if you'd like, by looking at these highs and lows here recently. And again, this goes back to the fact that markets love symmetry. And that means that a lot of times when you get, lows like this forming, like a higher low forming like this, you can start to kind of look for a little bit of symmetry here within this context. So if we do that, what you're looking at is the potential for this to be an ascending channel, even off of this high back here, right? You can kind of construct this a little bit here off of these highs and lows, although this is speculative. However, I would be willing to bet that if we get that push up here next week, if the market holds above here, right, on Friday, and we get that push up here toward these highs, take this out, and then tag this area, this is going to be that confluence of resistance to pay attention to for the pound, right around 1.358. Okay, so keep this on your radar, guys. That is going to be a big one. Again, it could serve as a magnet or target for this market, and then also key resistance if we get that push higher. Okay, so let's wrap up with gold XAUUSD, which obviously massive uptrend here from this market, and it just continues to turn higher. I mean, we have all of these sell side imbalances that are open, and I'm not saying that we're going to come down here and test these. Now, I did think in the last weekly forecast, I thought 3,800 plus would be a little bit harder to get through, and that goes back to the weekly time frame. If we go to a log view, you can see where we have this channel off these highs and lows. And notice how back here, gold never closed above, right? So this is technically valid. And I did think that this area up here would be a little bit harder for this market, but so far it is not. And the US dollar looking weak again isn't helping. Looking here at the 4-hour time frame, you can see where since the low back here on September 18th, we do have this ascending channel. Now, it's not quite a parallel level, although, I mean, you could make it that. You could kind of form fit this a little bit to make it that, but you can see a trend line off these highs back here, and you've got a trend line off these lows. So bottom line, as long as we're in this channel here, the market is a buy on pullback kind of market. I mean, no doubt about it. So really for now, it is coming into these highs here. So that's going to be resistance. Obviously you don't want to try to buy into this. And if we take a look at the 30-minute time frame, full disclosure, I have not actually looked at this yet on the 30-minute for TPO, but you can see where, this area through here, like if we were to merge these areas, just because this was some sideways consolidation here for gold. This down here is really, probably going to be the area to watch next week for support. So you've got this 3-day composite here, this POC, point of control, meaning that this is where gold spent the most time within this consolidation. And so if we map this out here, just to kind of give you guys a little bit of an idea of what to watch next week, if we map this out here with a horizontal across here, you're looking at this area around, 38.60 or so. Okay, so, this general area back here, if we turn this off now, clean it up a little bit, and head out here to the 4-hour, what you'll notice is that there are also a lot of closing prices here on the 4-hour around this region as well. Okay, so I think that's going to be what to watch next week. Same thing with the daily. You can see where that was pretty close to the low on Friday, but there is a chance we get a pullback, into this area on Monday of next week. Okay, so that's what I'd watch for gold. I mean, obviously, again, as long as we're within this channel here, carving higher highs and higher lows, this is the kind of market where you want to look for buys on pullbacks. Do not try to short this market. Even in last week's forecast, guys, when I talked about 38 plus being a little bit harder for bulls, I never in that video said to short this market. In fact, I even said that it's not the kind of market where you want to short. Okay, so that is that for gold, guys. I mean, really, it's a very strong uptrend. You want to be looking for buys on pullbacks, in my opinion, never financial advice. But in my opinion, that's what you want to be watching here for gold, as long as we're trading within this channel and holding on to these levels. But again, watch that area around 38.60 support next week for a potential pullback into this area. If we get that, then really, I mean, you look at this here, there's no reason why gold can't be trending higher toward 4K really within the next week or two, okay? Now, obviously, if we break down from this, if this were to happen and we were to get a breakdown from here, then we could open up some downside targets and start targeting some of those sell-side imbalances. But again, for now, very strong uptrend here. It is, in my opinion, a buy on pullback kind of market. All right, that's it for today's weekly Forex forecast. Be sure to subscribe to the channel, hit that like button. Also, join us in Discord. See the link in the description of this video for 85% off. I will see you on the inside. Have a wonderful weekend, and I will talk to you again next week.